Okay, well, thanks everyone for joining. Hope you had an opportunity to chat with your with your fellow attendees, and hope you found the remote experience interesting. We're going to go ahead and get started with our session here, our presentation. And so, for those of you who I did not meet around the room or haven't met before, my name is Rob Kelle, and one of the co-founders of Maple Business Council. So I'm going to go ahead and start kind of walking through our session today. Of course, we just had our virtual table networking. We're going to now do a quick report on Maple Business Council. And then we're going to have a couple of presentations, one from RSM on IPO and SPAC, and then one from Knobbe Martens on IP due diligence. And then from that sort of presentation mode, where we'll answer a few questions along the way there, we're then going to shift to a panel discussion with our presenters. So that'll be an opportunity to ask more questions along the way. And then we're going to come back to that virtual networking. So if there's someone that you didn't meet, or you have a question for one of the speakers, we'll have you give you the opportunity to network with them again. You'll find that the lounges on the outside bottom corners of the room, labeled RSM and Knobbe Martens, have specific questions for our speakers at that time. You could go and meet them in their lounge. So just a couple of quick housekeeping items. Lines are muted just for a good audio experience. We'll do our best on stage as well to keep them muted when we're not speaking, to avoid the background noises and so forth. We are recording the event, and we'll make a recording available along with the slide material. You'll get an email direct. You can access that material. Questions are welcome along the way, so certainly please enter them in the chat box, and we'll try and get to as many as possible. And again, if we don't get to your question, feel free to jump into the lounge and ask the speakers directly. So just kind of talk about our community. Continues to grow. We now represent 21 sectors. We decided early on we would be growth stage and sector agnostic, and we think that is developing a nice, strong, diverse community where you should be able to get answers to most questions. Someone in the network probably has an answer for you in just a great number of sectors. And then we're based in 18 markets across Canada and the U.S. So we're in a great number of regions. And so the nice thing about that is you may have someone that's part of the Maple community near you, or you might be looking to expand into one of these markets, and you'll have an opportunity to find someone there. Interestingly enough, the membership breaks down in that we've got about 58% in the U.S. and 42% in Canada across 4 provinces. So we try to keep that good mix. We're really trying to be truly cross-border, and the membership is proving out to be just that. So we have a couple of new members at Maple. So I want to welcome these new executive members. Both are from Vancouver. Miss Elena Poliski is the managing director of Art One Translations, and they provide multilingual translation work for firms internationally. And Mr. Marco Dekovic, Vice President Public Affairs at Global Container Terminals, and they operate terminals at the Port of Vancouver, New York, and New Jersey. So we're thrilled to have both of you on board. And then we're also excited to announce that the government of Quebec has joined Maple through their Delegate General in New York. So welcome to Delegate General Catherine Lebier and the rest of the team on the Quebec organization. And something new we just launched yesterday for our members is, as we continue to be in this virtual space, we find that social media, can be a distraction. And if we get messaging out to a platform, a group, or whatnot in a in a public forum like that, there's no way to have a real focused networking conversation. And one of our advisory board members, Delilah Panillo of TMX, shared an interesting thought with us, and she said that one of the things we should be doing is giving people an opportunity to share an offer and an ask. So, what is it that you can offer the community, and what is it that you'd like to see in return? And so we've launched this community literally just yesterday, and our idea here is we really want to be able to showcase individuals who are members of the organization, and really identify what it is that they can offer and what it is that they're looking for in the community. And that doesn't always come out in LinkedIn. LinkedIn becomes more of an online resume. And so we think that this is going to help us build a strong community of people who help each other. And having it in this sort of focused channel allows them to come to something that's all about this cross-border topic. And so we hope that it becomes another valuable asset for our members. So with that, I think another thing that's really important is storytelling. And I'm going to hand it over to Stephen to take it from here.
Great. Thank you, Rob, and welcome, everyone. For those I haven't met, I'm Stephen Armstrong, co-founder of Maple with Rob. And we're excited to be hosting this event together with RSM and Knobbe Martens, and welcoming you through this new platform that we're using to hopefully bridge that gap between in-person events that we all are hungry to get back to and living in this current virtual world. Story is an important way for us to connect with one another between these events. And next slide, please. We have the opportunity to share a lot of perspectives from the collective expertise within our community. Last year, we launched a lot of interviews with key partners and economic stakeholders. Our most recent one was with Nigel Neal, the Senior Trade Commissioner for Canada at the Consulate General of Canada in New York. And you can find our interview with Nigel that John Costanzo, our Executive Director in New York, had on our website with our other articles and interviews. Next slide. We also have a variety of content that's come out that I think is really meaningful in terms of our business planning and informing our thinking. From RSM on the left, Joe Basuelas, the chief economist, wrote an excellent article on forecasting the Canadian economy. From QA Consultants, we had a piece in our January issue talking about smart ways to manage security and privacy for remote distributed teams for an organization, and some simple action steps that people can take to make sure that we do it the right way. And then two of our speakers today, Dan Altman and Vlad Teplitsky, also wrote a great piece on strategic considerations related to timing your patent examinations and why sometimes you go fast, sometimes you go slow, and that's available too for you on our website. Next slide. Our community is growing in an important dimension beyond our membership as well. And on the next slide, I'd like just to comment on something that Rob and I and our leadership team are really excited about, and that is to recognize our role and accountabilities with respect to promoting more diversity, equity, and inclusion. As so many of our organizations are looking inward to see what can we do and how can we be part of a stronger future for everyone. And we think, since we are a membership organization with the opportunity to tap into so many different companies in Canada and the United States, that we really have a unique vantage point to hear from you about what you're doing in your organizations around DEI. And then to take that insight and that work that you're doing and share it with our fellow members through our content platforms. And so whether it's through our Momentum issue or it's our video series, events like today, we have an opportunity to share insights with a broader network. And we have over 3,000 people that follow our newsletters and our updates, not to mention what we do on social media. So we think this is an opportunity for us to leverage more in this year. Next slide. So some things that we've been doing recently, and this is really just baby steps, we realize, but we did publish our DEI mission and some of our commitments earlier this year on our website and in our January issue of Momentum. Last month, the province of Ontario, one of our organization members, wrote a great piece about collaborative communities in both the public and the private sector. So I encourage you to look at that. And then I had a really wonderful moment recently talking with the CEO of Hemlock and Harling, a Vancouver-based marketing company. And it wasn't about their work per se. It wasn't about what we do at Maple. We came together with one of our executive members and together with Jason C., our executive director in BC, to expressly talk about what are they doing around diversity, equity, and inclusion, and some things that we had seen them publish online. And that has now led to an introduction to the US State Department, who expressed interest in what we're doing in Vancouver and beyond, and to link the State Department with this company. So we're excited that we can forge new conversations on this topic. And you'll see more content through our social media channels. And just a heads up for our members, we're going to dedicate our June issue of Momentum to diversity. And we're going to be reaching out to everyone well in advance to ask for what information we can share about what you're doing. And we're going to create a compilation issue on this topic and share that with our network too. So look for more info on that. Next slide. Okay, just briefly on what's upcoming. We have 2 more events this month that are going to be terrific. John Costanzo is hosting our New York Spring event on March 17th, St. Paddy's Day. We'll have presentations from the Toronto Stock Exchange and Purolator International. And then we'll wrap up the month in Vancouver with an online event focused on Brookfield Property, one of our corporate members, and the work they're doing across Greater Los Angeles on key development projects. And there's one in particular that we've been tracking closely with them for a couple of years now, and it's a $200 million investment they're sinking into the LA Fashion District to really redevelop the historic Fashion Mart, and it's the California Market Center, and it's going to be a new hub for tech companies and fashion and beauty brands to come together, as well as be a community focal point for socializing and hospitality. And it's really an impressive development project, and another example of how Canadian investment is helping to grow and shape Los Angeles and Southern California. So that's going to be a terrific presentation to take in as well. Next slide. And then from our partners, just to put on your radar, the oldest World Trade Week celebration in US is in Los Angeles with the LA Chamber. And we're proud to be a sponsor again this year. It will be held virtually on May 6th, and there'll be more information on speakers. Always a great program celebrating the importance of international trade, as is also Orange County's World Trade Week celebration, which this year will be over 3 days, held virtually. And we're excited to be joining the U.S. Commercial Service and the Mexican Consulate for a discussia on the USMCA CUSMA trade agreement that was signed into ratification last July. And that will be part of the overall program. World Trade Center LA is one of our strategic partners, and every year they issue a fabulous report on foreign direct investment that comes into Southern California. And this year's report will come out on June 2nd. And later in the year, they're hosting their Select LA Investment Summit, which always brings top-tier speakers to talk about different key sectors and what's happening here in the greater Los Angeles region. So you'll be seeing more information on these events in our upcoming newsletters. So with that, we'd like to now transition over to, before I do that actually, I would like to just extend a welcome to those who are joining us for the first time, or perhaps have been to a prior Maple event but have yet to join. We're very passionate about this work, and we continue to develop ways to amplify your work and your mission to a network of people who are interested in learning more about growing north and south across the border. And so if you have an interest in hearing more about becoming a member and the benefits associated with that, please reach out to me, and you can also find me on LinkedIn. Thank you. So with that, I'm going to introduce our speakers today from RSM, and then I'll turn it over to Rob to introduce our guest speakers from Knobbe, Martens. So I'd first like to introduce you to Stephen Edwards, an RSM partner and their National Capital Markets leader. Stephen's based in the LA office with more than 25 years of experience serving domestic and international clients. And he guides teams which provide IPO and transaction readiness assessments, program management support, capital markets advisory, financial reporting, operational process improvement solutions, and Sarbanes-Oxley implementations. And this is for private businesses of all sizes that are anticipating a capital market transaction. And prior to joining RSM, Stephen was an audit partner with a Big Four firm for more than 20 years. So welcome, Stephen. And I'd also like to introduce David Mao, who is an RSM Director of Valuation Services. And David brings 20 years of experience in financial advisory and valuation services to both domestic and global companies, with a diverse experience serving a wide range of industries, including tech, telecom, media, entertainment, consumer, healthcare, life sciences, and financial services. And client engagements have ranged in size from startups to multi-billion-dollar market capitalizations. Also, prior to joining RSM, David worked at Big Four firms and several boutique CPA and valuation firms. So welcome, David. And then we'll turn it over to you, Rob.
Fantastic. No, we're going to hit the this capital market space first. So thanks, Stephen. As he mentioned, I'm Stephen Edwards with RSM. And if we could just hit the next slide, I want to show you what's been happening. And you kind of have not been able to get away from it probably as far as the IPO world. So taking a look at this slide, it's IPOs, and the next slide I'll show you some SPACs, but for me, it's been exciting because it's something that I'm passionate about. I've been working on day to day. This is what I think about. So just take a look at the numbers though. From 19 to last year, 2020 had the highest number of IPOs at a historic high, 106% from the prior year as far as just volume, and on a dollar basis, 150% more was raised. So these are just, impressive numbers. And as said, anyone that picks up a paper, the business section is going to see it. If you move to the next slide, this what I like to call a SPAC attack. And it's and it has just been that, and we'll go over a little bit what SPACs are. There's probably a wide range on the phone as far as understanding of them. I won't get into too much detail, but I wanted to show you the numbers. And it kind of looks like a guitar, and it's not meant to be. It may be hard to see, but just to give kind of the impression, it's a timeline from top to bottom. So January 2020 is at the top, and these are the number of SPAC IPOs. So as you can kind of see, it's fairly consistent with prior years, kind of a trickle going down. And then about midway through the year, you have this, large balloon of SPAC IPOs happening, and the money basically that will be heading into the market. And I'm curious, I've not seen the February numbers because you can see it got really large down in this last month, January 2021, and that money's all going to be deployed. And to the right is a graph of the percentage of overall IPOs and what percentage of those were SPAC related. So as you can tell, it's just a spike, and it's gone up. And we'll go over a little bit as far as the financing, of the SPACs and how they work. But traditional IPOs are out there. SPACs have gained speed the last 6 months, you can see. So it's an exciting world. If you could hit the next slide. Now I know that I want to get, this is the kind of the main and primary kind of topic is related to IPO SPAC ready. And what I call it is just being a public company. And that's what, as Stephen mentioned, spent a lot of years in capital markets, probably half my career has been. Also applicable to this group as well is the time that I spent overseas. I was an expat with a public accounting firm for 10 years, and it was all cross-border type of transactions and always capital market related, in going into the SEC, going into the US markets and into the European markets. I was based down in Sao Paulo, Brazil. But thinking through it, so a lot of these companies, when you start thinking through of going from private to public, it's as simple as that as far as the phrase. To do it is a little more complicated. But this is the slide that I like to keep on my table as a true placemat, because it really is that comprehensive look of the different areas of the company that you need to be thinking about and have an action plan about to make it really happen, to be a true public company that's running well on all cylinders. So we're not going to get into each of these wedges of the wheel, if you will, but a few of them you can see there. I mean, a couple are obvious that everyone would think of, financial accounting reporting. True, you got to get the regulatory pieces together, you got to get the financial statements together. But on the outer edges, you can see is you have to have a point person running it, project manager. Your technology and your systems have to be up to speed and be able to close the books, be able to get the information you need for investors. So as you kind of spin around this, and these slides will be left with you or you'll have access to them, it's just a great way for someone to get their head around of the process. And as I said, I still do it, and I've been doing this a number of years. I still keep this on my desk to work with. And next slide. This here, it's colorful. I mean, but we wanted to make it so that you kind of match out to the different areas, and it really ties back to that wheel. So what a company would do as they navigate this process of capital markets, being IPO, and we'll talk about some of the alternatives too, but really IPOs or SPACs basically, is you take all those different areas and then you start laying them out on a timeline and month to month. And then obviously you probably have what we do is we do a separate kind of timeline of each of one of these areas. And that really breaks it down for people that really start thinking about, okay, what do we need to do as a company? Then what do we need to do in some of these sub areas and departments of that company? And small companies may not have this many departments, but it's a way to really break it down and think through it. The next slide. This is a little bit of that breakdown that I mentioned. And these next couple slides, we're not going to get too crazy into reading all the words and everything else. Again, these slides will be available for you. But these four critical areas kind of show okay, what are the details behind of what we need to do in some of these areas? As I said, it's a major project, that IPO journey. It's interesting. And these types of items, say on this page, you'll start planning out. Some companies start 2 years ahead of time. I mean, ideally you do with a long period of time, but the 2 years, some are 18 months. The SPACs, and one of the advantages, it's a very accelerated timeline to go to market, but the disadvantage is you don't have as much time to prepare if you haven't been thinking about being a public company. The next slide. So facts of SPACs. I'm going to give you it's not going to be the 101 course. It's probably just one as far as kind of to be thinking about SPACs, and I'm happy to talk to people after. And people may have already seen presentations, so I don't want to get into too much detail. But SPACs, really, it's a blank check company. You have some investors put into money to a sponsor goes out and gets investors. Typically, the SPAC average is about 300 to 400 million. The sponsor then does an IPO, and it's an IPO is quicker from that standpoint because there's not much in the company except for cash that's put in. Now, how do they work is once that money is in there and it's established as a SPAC, that SPAC has, and per SEC regulations, it's not just a timeline that everyone kind of does. It's 18 to 24 months, and that SPAC itself goes out, finds the target. The target then, the deal has to be consummated in that 18 to 24 month period. Now, as they're looking to the targets themselves, it's multiple targets. It's not just one usually. And a lot of times, as SPACs have gotten more sophisticated, it's very niche related. So that SPAC sponsor, as they look for targets, maybe looking really into the EV market or specific technology area or a specific slice of consumer products and more sector related, because that's where they have the experience. And the reason they're becoming so popular, I mean, the main and primary one is the time, as I mentioned, it's accelerated. As I said, the target company they find may not be ready, and it's really a hard push to be public, but they find that target, it's an accelerated timeline, then it's probably once they sign the LOI, it's probably another 3 or 4 months by the time that target company gets pulled into that SPAC. That SPAC was already public, so that target company then gets pulled in and has to be running as a public company. So next slide. I'm not going to dwell on this slide. It's just basically, though, I want to show a comparison, and these are the SEC forms itself, but how similar in many ways doing an IPO, which is used on Form S1, and doing a SPAC, which is usually in a proxy S4 document. So it checks all the boxes for very significant items that need to get done from, I want to say mechanical, that's probably simplifying it, but a mechanical point of view of what you need to do from a regulatory standpoint to get ready. And then if you went back to the wheel that I was talking about, that's what a company needs to do to get ready to be a public company. Next slide. So now we're going to get into, and David's going to do this, is cheap stock. And to make sure it kind of dovetails into what I'm talking about, getting ready as a public entity or a public company, there's a number of different items that you need to do, including the finance and accounting, as I mentioned. Within that, there's a critical area in related to valuation too, what's called cheap stock. So it's something that's it's very important as the company starts thinking through it, and I'll leave David to discuss it.
Stephen. And also, I want to be mindful of the time remaining, so the folks in Knobbe can do their presentation as well. So I want to quickly go through kind of the valuation issues, cheap stock, right? What is cheap stock, and why does it matter? And the common issues we see in cheap stock, and how to prepare for these issues. Next slide, please. So the question is, what is cheap stock? It's essentially, in a nutshell, when companies issue stock-based grants that are significantly below their listing price for an anticipated IPO, that's where the situation arises, and that is usually uncovered during the offering process, during the process where the company is going IPO. The SEC will review the trailing 12 to 18 months of stock grants, and comparing that to essentially the median price in which the banker has estimated the IPO should be within a range. And if the values are significantly below or significantly different than the IPO price, the SEC will ask you to essentially reconcile the difference between the values. Next slide, please. So why does cheap stock matter? Well, it's essentially a very popular form of compensation for many pre-IPO companies. And the cheap stock create issues when the companies are in the process of going IPO. And the implication runs across the financial reporting, tax compliance, as well as the IPO timeline. There's a significant risk of delays in the IPO, or when a company's entangled in cheap stock issue, there may be a cheap stock charge, which is an incremental stock-based compensation expense that is usually unforeseen. So that ends up, creating some problem there as well. Next slide. Next slide, please. Yep. So common issues in cheap stock letter, when I said in the previous slide, the SEC will ask you to reconcile the differences in value. Where they're going to tend to ask questions would be around the methodologies and assumptions, the prices that the banker had provided you as an indication compared to what you've done historically in terms of your grants. Any key milestones that had occur over the review period, which is that 12, 18 months, it can go up to 24 months. And the timing of the valuations, when were they performed? Were they performed contemporaneous with the grants, or were they done, for example, a year after they were granted? As well as asking questions on, comparables, what type of comparables you're using, the weighting you're applying to your methodologies in terms of, whether there's secondary transaction prices. And lastly is that lack of marketability discount that they will be essentially asking for reconciliation on. Next slide. So in terms of preparations for an IPO and preparation for cheap stock, first one thing I want to mention obviously is to seek out assistance from reputable valuation consultants. And I want to point out the difference between looking at the boutique appraisal firms versus accounting firms. Obviously there's a price differential between boutique firms compared to accounting firms. But one of the things that I've noticed, and obviously spend the majority of my career in public accounting, is that we often see in public accounting, not only do we assist clients with the valuations, but we also see it from an audit standpoint as well, where we're assisting our audit teams to audit the fair value measurements. So we tend to see twice as many valuations as maybe a local boutique firm who only service their existing client relationships and may not see the broad issues that arises in valuing common stock. Another thing that companies may often want to do is to preemptively address the SEC by issuing cheap stock letter. And usually that is done after the offering price is determined, right before the roadshow that takes place for the IPO. And the goal here is to obviously synthesize the evaluation methodologies and assumptions so that you are essentially preemptively addressing all the issues that SEC will be asking. With that said, this is the end of the presentation, at least for the cheap stocks. So I wanted to hand this back to either Stephen to introduce the folks at Knobbe, or Robert.
So Rob, would you like to introduce our...
Yeah, sorry, I had a little technical issue, and that the linking that I intended to do didn't work. So bear with me just a moment. Okay, sorry about that, folks. All right, so I'm going to go ahead and introduce Dan Altman first. So Dan focuses on patent protection and related issues for biotechnology, pharmaceutical, and chemical industries. A particular specialty of Dan's relates to foreign patent protection for these industries. Dan has been recognized as a life science star by Legal Media Group. And he's spoken extensively in the field of patent law in both the United States and abroad. Dan has also lectured for AIPPI Japan, AIPPI World Congress, AIPLA, KTK in Osaka, and OSBio in Brisbane. And then Vlad is also a partner with Knobbe, and Vlad advises clients in the areas of strategic patent procurement, patent portfolio management, licensing, foreign protection, and other related issues. Vlad frequently counsels clients in the electronics, computer, information technology, medical device, artificial intelligence, semiconductors, and healthcare industries. He advises clients on open source software licensing, including IP strategy and compliance. And Vlad also advises clients on issues related to various data privacy laws, including HIPAA. So I will kick off their presentation. Here we go. So Vlad and Dan, take it away.
Thanks much, Rob. So Vlad and I today are going to talk about the IP due diligence process, and we thought that this was a topic that intersected well with the topic presented by RSM, and that's because one of the things that's going on in the background when a company is undergoing IPA or when it's undergoing a purchase by a SPAC is IP due diligence. And IP due diligence is just the process of evaluating all the IP and its strengths and weaknesses. So let's see the first slide. This is the three topics that we'll present today. Why do you do IP due diligence? What is it? And how do you get started? So the first slide will be the why slide. So why do you do IP due diligence? Why is it so important to figure out what the strengths and weaknesses of the intellectual property are before you undergo a transaction? It shows up in many different types of transactions, including IPOs and acquisitions by a SPAC or merger or acquisition through more traditional means, as well as a variety of other SEC filings. So it's not just the initial public offering where IP due diligence might be important. It's any time that you have to interact with the SEC and present an offering that will be regulated there. There will be issues that will be important to tell the SEC about so that the investors can learn. But that's not even the only time where you do IP due diligence. You might want to do it for your own company to see whether you are ready for acquisition. But if you're acquiring or being acquired, the IP due diligence could be quite important. So you have to validate the target company. You want to identify your own opportunities or identify opportunities in a target company to beef up the IP. What's a weakness that we can strengthen, or what are our strengths and how can we enhance those? One of the important things that we do when we do IP due diligence is we're looking for weaknesses, and often the most important weakness is that a company is open to a claim of infringement by a third party. And so IP due diligence often will try to identify that and recommend steps to mitigate the risks. Finally, another reason to do IP due diligence is just to do a landscape and identify who are the major IP holders, who are the people who are going to be both potential competitors and potential sources of litigation risk. And what impact does that have on a business that these companies are out there with their various strengths and weaknesses of their IP? So IP due diligence is a very broad topic. It arises in many different contexts, and it's used whenever a company needs to know about strengths and weaknesses of IP, either in themselves or in other companies. So what is it? I've already said identifying strengths and weaknesses, but what is IP? I've been throwing that word around. IP is a lot of types of intellectual property, which are tangible assets, but at the same time intangible. So they're an odd hybrid. It is tangible in the sense that there's a piece of paper and it says you have these rights that are set forth in the document, but it's intangible because it's really just intellectual rights. Patents are probably the most powerful type of IP, but there are many other types. Trademarks, designs, copyrights, trade secrets, and these are only the main ones. There are several other types that are created either by statute or just by operation of the common law. So when you're reviewing your own IP portfolio, you want to make sure that everything is satisfied, that all the requirements are done, that there aren't any informalities that are going to prevent you from enforcing your rights if you have to. You also want to see, does your IP portfolio cover what anyone else is already doing? If people are violating your IP rights, then you need to take steps to enforce them. Otherwise, depending what type of IP it is, you could actually lose your rights by failing to enforce them. So reviewing your own stuff is an important part of due diligence. But the other side, the third-party intellectual property, I mentioned many different situations where you might want to do that. The most important part of that is the pending, planned, or anticipated lawsuits from third parties, because that's going to be a significant effect on any company, even a large company. Patent litigation could be a significant distraction. So that's something to identify, and IP due diligence can help you identify them and be ready for when that comes. Finally, data privacy and data security. This has become increasingly important in recent years. And while not strictly IP, it's part of the technology review that comes under IP due diligence. Can we get the next slide, please? So the last main topic here is, what do you do to get ready? Once you decide you want to have IP due diligence, then what is it that you should be doing in order to get started? You first need to create a framework, because as you can tell from all of the things that I've said so far, IP due diligence is a very broad topic. And so you can't leave no stone unturned, or you will spend years and years doing this IP due diligence project and probably spend more money than your company wants to spend on it. So the first thing you have to do is create a framework and identify what are the issues from among all these potential issues that are most important to the particular transaction that is going to be undertaken. And then develop the framework based on that. So once you've identified what you're going to do, then you have to start gathering the information, because that's really what IP due diligence is. It's an evaluation of lots of pieces of information. So the obvious ones to find are the registration certificates for patents and trademarks, and a portfolio of what all the intellectual property is. But not all IP is registered, and so summarizing what all the IP is may be a difficult process. But so creating a framework for identifying what all the IP is will be very helpful to this process. So creating that summary, that's a good starting point for due diligence. A description of unregistered intellectual property is often very important, because many times the most important intellectual property isn't the registered intellectual property, but it's the unregistered intellectual property, such as the trade secrets, copyrights that haven't been registered. There's most of the intellectual property, if you looked at all of it, probably isn't registered. So having a process for identifying all that, it can be somewhat difficult, especially if you have a large company with lots of different departments. They all may store this information in a different way, and so coordinating and bringing everyone together is a big part of this. So let's see, the next slide is for Vlad. Vlad will talk a little bit more about this framework and what it might include.
Thank you, Dan. I'll just take a few minutes. We're running a little bit over time. But what I wanted to cover in the next few slides are the actual practical aspects of conducting due diligence. Dan talked about the purpose, the reasoning behind it, but here are some information for you as to actually how to do it and how this process is put in place, what kind of information we look for, what kind of actors are involved, and what kind of deliverables are at the end of what kind of deliverables are produced at the end of IP due diligence. This first slide talks about the framework, and really essentially due diligence could be a long and complex and involved process that could involve a lot of actors within a company, including, of course, technical people as well as business people. So one of the first steps we would need to do is to identify who are going to be the key actors within the company, who would be supporting the requests for materials and documents and providing information that we would need to conduct due diligence. So once that's done, we would also need to identify the business purpose for due diligence. And as Dan mentioned, there are different types of due diligence analysis that we could do. And in this step, we would figure out which one or which of the several types of due diligence will be conducted. And of course, the very important question of the budget, how much money, time should be spent on the due diligence. And after these key questions are resolved, we would just move on to setting up timelines, checklists, deliverables, meetings, and at the end of the day, come up with the final work product or the final reports. Next slide, please. The next couple of slides will cover in a little bit more detail the different types of due diligence that Dan mentioned and what kind of materials we would be looking for. And I'm not going to go through each one here. There is a lot of information we look for, including the scope of patent rights by looking at patent claims and reading the patent specification. We look at the assignment chain to verify that there's ownership. There's ownership from the inventors to the company. We, of course, make sure that the patents are enforced. They're not, for example, expired, or all the maintenance fees are paid on the patents. We'll look at licenses to see whether the company has entered into any license agreements that may have given up the rights to someone else. In this particular slide, this is the types of materials we would look for when we're assessing the value of the patent portfolio in general. Next slide, please. This is the type of material we would be looking for in assessing the value of the patent portfolio against a specific competitor or competitors. And here we are not just looking at the patent portfolio in general, but we're actually looking at as to how that patent portfolio would map on the specific products for a specific competitor. And next slide, please. And this is the type of IP due diligence that relates to assessing risk of infringement from third-party patents. This is what you may have heard as being referred to as a patent clearance study, or sometimes a freedom to operate, which, by the way, we are not big fans of using that word, freedom to operate. It could be quite deceiving, given that there are millions of patents in force today in the US. It's impractical to completely reach a definitive conclusion that there is complete freedom to operate from each and every potential patent right out there. But we in this type of diligence, we would focus typically on a subset of these millions of patents that I mentioned. Maybe we would look at specific competitors, or we would go out and conduct a search for specific patent rights, and we would consider those rights with respect to companies' products and establish non-infringement positions, and if needed, invalidity positions as well. So that's all I have.
Great, thank you very much, Vlad. And we're now going to segue over to a panel discussion. So if we could ask all of our speakers to come back on camera. We're going to follow up on these excellent presentations with some further questions, and also would like to remind our guests that if you have a question you'd like to share, we'll be happy to pass that along as well. So thank you both for providing a very comprehensive window on the IPO and SPAC readiness opportunity. And I guess the first question would be for Stephen or for David. So you're a company now thinking about this public company journey. Can you talk a little bit about the thought process about, is it right for us, and what's our motivation for going public in the first place?
Yeah, no, it's one question that I think is the first question a company should be thinking about, because the answer is really, does it fit the vision and strategy of what the company wants to do? It's not because I want to go through a public company process. I think most people don't necessarily want to do that. It's not necessarily just to be a liquidity event, although that could be one. But I think what the company has to think about is it something that this is something we want to do for brand awareness, or is it something that we do want a liquidity event for part of the owners, or a partial liquidity event for the owners? Or is the company looking to go into expansion and wants to use it, say, as a currency for acquisitions? So there's a lot of different things that a company should be thinking about of why do I want to do an IPO and go through the process. There's a lot of pros and a lot of cons, but it's a lot of effort and time to do it. So it should really be one of those things that says, okay, is it my strategy to be doing it? There's two examples that I have that was for similar, but one is I did an interview of Stephen Murray of DraftKings, and they did a SPAC, but similar idea. Why did they want to be a public company? And a lot of it was, hey, there's a lot of technology behind this. We need additional financing to go in. Plus, there's a brand awareness aspect. So that was a lot of the drive for them to go in and do it. And it's worked for them, and they've had a great run, and it's a strong company. Another example that I worked on was related to, it's a electric vehicle company, a trucking company. They needed to do, it's called a Hyliion. It's a public company. You can look it up. It's public by way of a SPAC as well. But they didn't have they had prototypes, but they needed to ramp up production in order to it was a electric vehicle company for large trucks and retrofitting engines and able to do that. So they had the engineering behind it, but they didn't have enough funds really to kick in and say, okay, we need to start ramping up and actually making production of these vehicles, or engines, if you will. So those are a couple different reasons, but it fit right into the strategy of the companies.
Right, thank you. And what are the other alternatives that a company might be considering or determining whether an IPO is the right strategy?
So, I mean, you can see as I first started, my presentation was, the IPOs, obviously an alternative. The traditional ones are still big and the market's doing well. The SPACs, obviously, as well. But you can't forget that the private equity funds are still out there. Venture capitalists are still out there. There's some more confidentially out. It's more confidential going into those situations. Speed is obviously it's a lot faster. You don't have the public company requirements. Those are still viable options, as you probably all know. On the public market, there is another type of public company. There's a route to take, if you will, and that's called a direct listing. There haven't been that many of those, but really what it does is it carves out the investment bankers in the process, and the company really just takes its company itself directly to the market. Some disadvantages with that, because it's not necessarily known, there's not a market maker and things like that, but that's another way to go. So, and then obviously the ones that a lot of companies work with are, with financial institutions, the banking. But I think in the public company world, companies are generally looking at IPOs, SPACs, possibly direct listing. If not, I see a lot of still private equity investment.
Thank you.
So you may be still carrying on from that, Stephen. So once a company decides that this is the path for them, what steps do you recommend that they take first to get prepared for private listing?
No, that's a good question, because what happens with those is the company sometimes thinks, okay, what do we need to do? And that's where a lot of times when I step in and start talking to companies, and it's very financial statement and accounting and SEC regulatory type of concerns. And those are major concerns. I mean, there's no doubt those are key pillars. But I think as the company, if they've got some runway and are thinking about it, they need to go back to that, that wheel that I showed and take a look at it and say, okay, what are the different areas of our company that need to be improved? And you have to get everyone's buy-in as well. I mean, you have to go to the legal department, you have to go to HR, you need to get down to operations, you need to work with the different people in the different areas to make sure, hey, they understand the overall process, the piece that they're going to be responsible for, and then how that all ties in. And that's where I see the more successful companies play this out, as opposed to somewhat siloed, because it really is a company effort to get through this public company process. And it can be an exciting process, but it can also be extremely stressful and frustrating if companies are not quite as open internally of what they're doing. I mean, obviously some things are confidential that not everyone needs to know, but everyone will be part of the process.
So as you're going through that process and you start to uncover challenges, potential weaknesses, that sort of thing, what are the things that need to be disclosed along the way versus things that you could work on quietly in the background?
I mean, some things that you could work on in the background is, and I tell this to companies all the time, is there's certain things a company just should be doing as a best practice. For example, if you take the Sarbanes-Oxley 404, the process internal controls, that setup is really a best practices for companies to get there. They need processes and controls. So the things like that can be done in the background of, okay, maybe you don't have an internal audit department, but these people have responsibility for improving processes and controls. How do we do that? What's our path? So something like that can be done that the company doesn't necessarily have to disclose, hey, we're thinking about doing an IPO, because you also don't want to come out with it really early and people think, oh, we're doing an IPO, and it maybe just fizzles out. Mm-hmm. But in the meantime, you can improve your finance and accounting department. HR compensation plans you can start taking a look at. Corporate governance is something all companies should have best practices or be looking into. So things like that you can do in the background without making that, put the banner up and say, hey, we're doing an IPO tomorrow.
And how often, when they start to recognize the rigor or the best practices, how often do you find companies look at that and say, gee, I don't know if this public company business is for me? Does that ever sort of happen along the way when they discover how much work it's going to be?
They do, and there's a couple of reasons that happens. That's one of them, where the company starts going down the line and says, this is really difficult. But more commonly, what happens is the market itself. That alternative for financing is just not, it either dries up or it's not the right time, or the investment bankers start pulling out and then the company doesn't go. Or the investment bankers say, hey, company A, we like what you do, we like your product, but you're just not ready yet. Talk to us in 6 months or 12 months. So that does happen, and I see it quite a bit. But hopefully the company's at least made some strides to just be a better company all the way around for some of the reasons I was explaining.
Question for Dan and Vlad. So how do you deal with strengths and weaknesses in filings that are required by the SEC?
Sorry there. So the SEC, we're not corporate lawyers. What we do when we do IP due diligence, we're assisting the corporate lawyers in putting these documents together. But the impression that we get from sitting on the sides is that what's most important when you're making a filing with the SEC is that you're not hiding the ball, that if there are risks, that the investors who would want to invest in whatever's being offered at that time, that those risks are put forward. And so the document that ultimately is prepared when the section on IP is finalized, it looks like a parade of horribles, because there is a risk that the company's IP won't protect its competitors. There is a risk that competitors will have IP that will prevent the company from doing what it's doing. If there are specific risks that you identify, then you want to identify those specific risks. But the investors have to do their own diligence, because they're going to get this document full of all the risks, and they have to evaluate, well, is this a risk that was put in the documents because it needs to be there in order to comply, or is this really something that's going to tank the whole deal? And that's up for the investors to decide, and that's what the SEC wants. The SEC wants the investors to be able to evaluate the information and make informed judgments.
That parade of horribles sounds pretty ominous, Dan. How about when you're conducting due diligence of trade secrets and unregistered trademarks and unregistered copyrights, how do you do that when these aren't registered anywhere?
Well, with these unregistered properties, probably the most important thing for us to look at is the processes that the company has in place to enforce its brand and apply its even unregistered trademarks and unregistered copyrights to its own branding and its own products, as well as to police the unauthorized use of these unregistered IP properties by third parties. And with respect to trade secrets, whether there are procedures in place to, for example, maintain the information that the company considers to be a trade secret. That's one of the key tenets of having a trade secret. And on the other side, whether the company has procedures in place to verify and to analyze and consider whether someone else's unregistered or maybe even registered IP could be infringed from use associated with branding the company's products. So we essentially would need to talk to the client and to ask and to delve into these procedures that the company would have.
Thank you.
Great. So a question back to RSM, and you mentioned Sarbanes-Oxley earlier and best practices and so forth. So could you maybe explain what a good plan might look like for developing a good finance organization to make sure they're ready to go public?
Yeah, and it's, as I mentioned, you have all the different areas. The finance and accounting is obviously one of the key pins to it. That's kind of my background as well. So it's something that I'm fond of, talking to companies about what they need to do. It's really what it is the company take a look at the finance and accounting and say, okay, we're going to have this wave of just activity that's going to be happening and requests. So whoever, the CFO needs to take a look at it and say, hey, who do we have on the team that's just making this company run right now? We've got transactional type of items. We need a certain amount of people. Do we have enough to take on another 100% of what we're doing or 75% of the time of what we're currently doing? And the answer to that generally is no. So I think what the company needs to do is start thinking, okay, how are we going to ramp up internally and what external advisors are we going to use? Because external advisors will, one is have more specific areas and knowledge, but they're also, not in a bad term, but they're more dispensable, right? I mean, because the external ones can start and they can stop. They're not on board for, indefinitely. So the company needs to take a look, okay, what do we have on hand? Who's on our team right now? What areas do we need to be improved on? And generally those areas are, really SEC type of related areas because the company's not doing it. And then some of the advanced accounting, do we have people to do that or should we, use an external advisor? So the company takes that inventory of it, then also needs to make sure that if the people they're bringing in, I think that, the people that are coming to the company, the external advisors will have the knowledge and they should, but are we bringing people that have the right experience of taking us to that next level of being a public company, a registrant with the SEC and the things that need to get done? So it's really, do we have the right amount of people? Probably not, because otherwise you'd have too many at the current time. How are we going to increase the headcount? How are we going to increase the advisors? Make sure you have it laid out in the specific areas. And then the other part is having that key point person, making sure that all gets coordinated. Otherwise, I've seen it plenty of times that people are off doing what they're doing. They think they're doing the right thing, but they're not, they're not working as a team.
From an advisory perspective, what are some of the other key types of advisors that you might bring in? I mean, how do you pull together investor relations and really make sure that, you have, Wall Street covered and you've got all of your bases covered? So beyond accounting, what else? What other types of advisors would you bring in?
And another good point, and I was talking to the CFO of Datadog who went public not too long ago. I thought actually maybe a year ago. Like everyone else, time is kind of a time warp. But having a conversation with him, and he's gone through two IPOs in a SPAC. What it was, his advice was, one is just to get an idea, join different events, webinars, presentations, to have an idea of all the different advisors. And this is kind of more of a general, recommendation, that you understand the process better and who's involved. Then to the specific answer to your question, you're going to have, the kind of the principal folks involved in the IPO, and then you have the advisors. Principal folks are obviously the company, the investment bankers, the attorneys, and the accountants. And it sounds like not many, but each one has loads of people. So you get on these initial all hands meeting, you have 40 people on the phone. But the advisors that are key are generally on the finance and accounting side. On the HR side, there's firms that specialize in two things that are generally helpful. One is investor relations. Company that generally doesn't have it. There's some that can be outsourced, which work well at the beginning, and then you want to bring someone in-house. And then the other is someone that's really going to have to structure and look at the compensation plan and program for the company, because it gets more complex as a public company. And then just handling the volume. And then you have, I wouldn't call them advisors, but the board has to be upgraded. Typically it does, and get the right people in. And so you're going to have a myriad of different people that will be helping out the SOX as well. You might bring someone in as an external advisor to get the Sarbanes-Oxley kicked off. So there's different people to look at, but it's if you do it step by step, it takes a lot of the stress away. And if you have enough time, you can make it happen properly.
Question for Dan and Vlad at Knobbe. If a company has a strong patent portfolio protecting its products, does it still need to be worried about being sued by a third party?
Yes, unfortunately, yes. Probably one of the most common misconceptions about what the scope of patent rights is that patent in itself doesn't give any positive rights to make or sell anything. Unfortunately, the only right that patent grants, which is a very strong right, is the right to prevent someone else from using the patent technology in making or selling the product. So by inference, of course, having a strong patent portfolio is great to protect the company's products from being ripped off by competitors without a license, but unfortunately it doesn't really correlate well to someone else having rights that might cover these products. So we would conduct the type of due diligence that Dan and I discussed, which would look at third-party rights and consider them, and look at infringement risks.
Great, thank you. Now, specific to data privacy and security, Vlad, what types of risks do you find come out in due diligence relating to privacy and security?
Yeah, this is a big area in conducting due diligence for data privacy and security risks. We would look at the type of data that the company collects and whether all privacy laws are complied with. For example, a company could be a medical company, and the type of data being collected is medical data, then HIPAA and other types of laws would have to be taken into account. Or the company is collecting personal data of users, and there are privacy laws, particularly in California. There's a pretty strong privacy law in place today, so we would consider that in the first instance, whether these laws apply, and if they do, then what steps is the company taking to make sure that there's compliance with those laws. Security and cybersecurity in particular is also a huge issue. What is the company doing? What procedures does it have? Policies, mechanisms to make sure that the data is safeguarded. One other area that we would look at potentially is whether the company is using open source products, and these are the types of software libraries that are basically freely available. And in today's world, where software products are very complex, It's very common for a company to take off-the-shelf product, off-the-shelf libraries to build its product, because otherwise it would just take forever to reinvent the wheel or the wheels every time. The problem with these types of software components is because they're free, they don't quite have the same level of care put behind it as a commercial product would. For example, you may remember in 2017 there was a huge breach of Equifax servers, where something like 140 million users were affected. That resulted in Equifax having to pay $425 million settlement. And one of the reasons, after this incident was dissected, one of the reasons for the breach may have been use by Equifax of an open source component called Apache Struts. So that may have led to at least that use may have been at least partially responsible for the data breach. So we would look at these factors and consider them in order to make an assessment of the data privacy and security aspect.
Thank you, Vlad. And just a follow-up to you or to Dan, can insurance be obtained to mitigate some of the risks that are identified? Is there a role for that?
Yeah, so insurance is available for lots of these risks. And when we've identified risks, sometimes we ask ourselves, is this something that an insurance company would actually insure against? And the answer, surprisingly, in almost all cases, turns out to be yes. And sometimes the insurance is surprisingly affordable. Sometimes it's not. But it's certainly worth looking into whatever risk you find. It's become somewhat common for insurance against patent infringement to be available. The insurance industry has figured out a way to identify the level of risk and to monetize that in a way that they think can be profitable for them. So, and the level of affordability can vary quite a bit depending on how the actuarial figures come out, whether the risk is something that can be attenuated in that way. But it's also possible to buy insurance for patent enforcement. And this is something that can be quite valuable to a smaller company that can't necessarily afford a full-blown IP litigation. They can buy insurance, and the insurance companies typically are paid by taking a share of the proceeds if they participate. So there are many different ways to mitigate the risks that arise.
Thank you.
So another question is kind of on the IPO process and so forth. You know, we talked a lot about sort of the steps to take to get launched and prep a team and bring in all the right advisors and so forth. But you know, now you're out there. You know, you're ready to launch or you have launched. A couple. You know, what are some success factors that investors are going to look for, and then also what are some of the that you'll want to have in place so that as investors now have their eyes on you, that you feel confident that that you're sort of meeting their going.
On the corporate governance side, just thinking about that, I mean, it's something that you're going to have your policies, procedures, processes, you know, well documented, not just in the particular. It looks like we lost Rob for a second. Not just in your finance and accounting area, but also throughout the organization. I think that's something that's important. Investors will be taking a look at. The other piece is really when you take a look at the board composition. You know, investors will be looking at, is it the right board composition? You know, and do we have the audit committee? And do we have the right culture of where it all maps out to what the company's strategy and vision is? And people and investors, you know, will really notice that going in. And some of the success factors I really think are, I mean, it sounds crazy, but it's really like any large project. It's got to be prepared early. I mean, I think that's one thing that is a consistent theme when I've talked to people that have gone through this more than once, is really making sure that you have prepared everything early and gotten through the process. And the other is, once you start thinking about, as you're going public, is you're going to have this reporting, public company reporting for the next, quarterlies going on and on and on. So, who's going to be driving that? What's that message going to be? Is the company really ready to do it? So many times you will have people, still those external advisors may be helping out through the first couple quarters to get that company staying on its feet, moving forward. And then as the team builds up, being able to kind of lift off and be on your own and fly on as that public company will. So it's an exciting process. And again, if you just do it planned out, it's helpful. And I think companies that do it that way have really had a lot of success.
Great, thank you. Oh, Stephen, you're muted. Yep.
I do that sometime. Maybe just to wrap up before we close out our, which has been absolutely fabulous. Well, thank you all. Before we return to some networking, what would you say overall are some of the pros and cons of going public? Stephen or David, how would you summarize that?
I can do it, and then David could mention and add to his too, as far as what he's seeing. I think, the pros, somewhat obvious. You have that access to the capital. As I mentioned, there's a lot of things that are positive. Being a public company, the awareness. You've built up the company to have that structure. But some of the cons are exactly related to that. Is maybe the company doesn't need that complete structure and scrutiny on a quarterly basis as a public company. So those are, I would say in a nutshell, that is a lot of the pros and cons when you take a look at it. And then it drives back to kind of that first question you asked, as far as, why, what motivates the company? If it's driven from a strategy that really, to get to your vision, you need to be public, then it really ties in, and that company is, more successful, and that's a heavy pro. The con is if it's done for I wouldn't say the wrong reasons, but not a reason as far as strategic, then it's a lot of effort that goes in. It's a really, it's a burden on the company to be, and costly on the company to be able to have to maintain being a public company. So I think those are a couple of the main things that I'd want to point out as far as the pros and the cons. There's, certainly a long list of them, but those are the two main ones that I've seen over time.
Thank you. David, anything else you'd like to add?
I would echo Stephen's comments there. There are pros and there are cons, and I think from my perspective, one of the cons is the focusing on the burdens, the significant cost of staying or being a public company. The financial reporting requirements, the ongoing filings, and that can be very burdensome. Even in the accounting treatments, for example, in as it relates to financial reporting and valuation, there's the private company elections that private company can choose compared to a public company. Obviously, for a private company, the complexity is much lower, and the cost of preparing those valuations would be significantly less than a public company.
Right. Well, thank you all for a very robust discussion. Rob, I think we're in a position now to come back to our networking.
So we'll go back to networking, and I apologize, Jason, you asked in the Q&A, and I'm just noticing it now. But rather than answer it in the panel discussion, why don't you catch up with the team in the networking? And thank you all for paying attention. Thank you to our panelists discussion, and we'll see you back out on the floor.